Hi there, Ruth. Hi there, Vanessa. We're going to talk a little bit today about sustainability, which is a topic that's close to our heart, really important to our clients, and is becoming more and more prevalent right across that investment spectrum. So great to have you both here. I want to get straight into it, and I think I'll start with you, Ruth. You're one of our investment advisors, and you have lots of clients, experienced clients, newer clients, older clients, younger clients, right across the board. So in those everyday conversations, I'm really interested to know how important is sustainability to your clients, and are you seeing more people focus on them, a wider range and a greater interest and sort of really drilling down? How's it playing out at the coalface?
Well, I think more and more people are certainly wanting to know about it for sure. All obviously differing degrees and for differing reasons. I think in the past it was more the exception rather than the rule. Some people had exclusions being things like, or many people had exclusions being gambling, didn't want any exposures to any of the casinos or alcohol. Whereas now, virtually every client meeting, every discussion, every contact, really, regardless of age, regardless of whether it's a trust with mandates or whether it's family driven or whatever it is, new clients, existing clients, all really want to have a conversation about it to some extent. Yeah.
That's really interesting. So the key point I'll take from that is it used to be the exception rather than the rule,
Mm.
and now that's been turned on its head, and it is the norm.
Definitely.
A
Definitely.
majority of people,
Mm.
and I guess that aligns with some of the things we're seeing globally, doesn't it, Vanessa? I know you've done a lot of work sort of for our sustainability products, and you keep a very close eye on what's happening overseas and how important this is right across financial markets. Are you seeing that slow down at all, or is it just growing and growing and becoming even bigger than it already is?
Yeah, it's definitely becoming bigger. I was reading a report yesterday actually that was saying that the flow into sustainable funds has doubled in the last year. And not only that, we're seeing more and more funds available that have got a sustainability slant on it, which is really cool. And then on top of that, we're seeing all these regulation changes, and shareholders are becoming more interested in this and asking those companies that they're investing in to do more in this space. So it's not going away anytime soon.
Right. Yeah. If anything, it's just going to become more important to more people, which is why, regardless of how strongly you believe in it, you can't ignore it, can you? Because it's going to make a difference from a financial perspective and an investment returns perspective, as well as all the good things that it can bring to the way businesses operate and behave. I want to stay with you, Vanessa, and just we've talked a bit in previous videos about our sustainability framework, which you had a large hand in putting together, and we've chosen to do everything from the ground up, the hard way, rather than just sort of having an off-the-shelf product where someone else has sort of done the computer-generated rankings. And we think that's a real point of difference, and we think it reflects how important this area is to us. Are you getting more interest in that from not just our clients, but I guess corporates and larger organisations, whether it's charitable trusts or iwi groups? Are you seeing a growing level of interest in the same way that Ruth has described?
Yeah, so definitely from those larger charities and trusts and things now asking us to review their portfolio and see what individual stocks they're holding, as well as within their funds what stocks are in there and should they be looking out for any in particular. We've also been asked to look at the carbon footprint of portfolios now, which is, it's great. It's great to see.
Yeah, very good. And even corporates, I would imagine, are asking you a few questions about how they can improve or disclose more or put policies in place to ensure that they get a strong score or a strong ranking, because it's on their radar, isn't it? Boards and management teams.
Yeah, so we've had a few corporates approach us ahead of them putting together their first sustainability reports and ask actually what's within our framework so they can make sure they're covering off those topics. And I think with the new climate-related...
Which is great, because...
sorry. I was just going to say, with the new climate-related disclosures regulation coming into play, that's also going to let us see a lot more information around climate risk.
Yeah, very much so. All I was going to add there when I rudely interrupted you was just to say that that tells us that we're actually making a difference, aren't we? Because if we've got some of these companies asking us for guidance, then what we're doing is actually having an effect where it matters. So I think that's wonderful. Back to you, Ruth. Some of those issues and that positive feedback that Vanessa's talked about, is that something you're seeing from clients as well? Obviously, having a level of interest and wanting to have the discussion is one thing, but are you actually seeing people change what they invest in? Are you seeing them come to you and saying, we actually want to change the portfolio based on some of that information you've given us, some of the scores that this company or that company has received from your team? Are you seeing it actually change the way people are, where they're putting their capital?
Yeah, definitely. I mean, I think, most clients want to do what they deem to be the right thing. And that comes back to everybody is different, and some have more specific needs, requirements, and that for it all. But I think the thing is that they trust Craig's, they trust the tailored advice, they trust our research, and they absolutely really do recognize the fact that Craig's didn't go and buy this off the shelf, that you and your team have all done the hard yards. You've lifted up the bonnet, and you've gone and looked at these companies yourselves. So that's another level of trust that comes on board with that. And any queries that we can have, or that we do have, we can come to the team and ask on those. I just think the other thing with it as well that clients do appreciate is that it complements how we do invest initially. So we do invest in a transparent manner as best as we can, and people can look at their portfolios, they can see what they've got. So it helps that side of it as well. So I think that people have it as a real bonus, and I do see that it's a jewel in our crown. And, 3 different examples of how we've used it or clients have used it. So it does come from advisor side as well as the client side. So as a client, we had one client who had a portfolio that was already in place, an established portfolio. And then I think his daughter started chewing in his ear a bit about it. So he came to us and he wanted us to go through the whole of the portfolio and review each holding that he had. And then he came and put in a mandate that he didn't want anything to invest in any company that had a sustainability score of less than 4. So there was a few things that we had to take out and a few things we had to replace it with. But that was one example. Another one, we have a trust that one of the trustees started to feel a bit nervous about one of the companies, which was Nestle actually. And we came to Vanessa and had a chat with Vanessa about it, and you were in the middle of doing the sustainability report at that time. And we went back to the client with all the information, and she became really, really comfortable with it, and so it stayed. Another example is there was a change in a research view on a UK company a while ago, and to replace that company, we wanted to come out of it, so we recommended our clients come out of it, and we reinvested the proceeds. We recommended we reinvest the proceeds into an investment trust back still in London, that is involved in the impact investing, so social and environmental policies. So I mean, that's 3 examples of how it's been used, and obviously got plenty more. So definitely.
Wow, that's fascinating stuff, isn't it? Yeah, I'm sure we'd be here all day if you kept
Yeah.
rattling through examples, which is great stuff. And I think listening to you talk there, it's quite a distinct proposition, isn't it, that we're talking to clients about than maybe some of the managed funds out there. And we've got some very good fund managers in New Zealand. A lot of them have a real sustainability focus and overlay, but it is quite a different kettle of fish to have sort of, here's fund ABC and, we've done this overlay, so just trust us that it's all sustainable. It probably is, but everyone has their own view on sustainability, don't they? So sustainability means different things to different people, and having that ability to go through your portfolio, here's all the securities I own, the investment trusts, the ETFs, the shares, and evaluate them and take a view and tailor that to your own personal sustainability position. That's something quite special and quite unique.
And I think it's also, I also think it's important that people maintain an investment diversification and strategy as well. All dovetails in with that too.
Yeah, it's all pieces of the puzzle, isn't it, that sort of fit together. No, I like what you're saying. That's great stuff. I'll just throw it back to you, Vanessa, and we'll ask a couple more before we finish up. You've written a lot of reports over the last 12 months that are sort of on sustainability, sort of just topics, as have a few of the others, our colleagues in the team. Diversity, supply chains, animal testing was one that you wrote that our clients will see shortly in our latest newsletter. There's always a few surprises in the answers, isn't there? Like the types of businesses you think might be doing very well and those which might not be. There's always something that that I'm surprised by that I didn't know. So I find them all very educational. Is that something you're finding across the board, that it's never as easy as it looks, or it's not as black and white and things aren't always as they seem on the face of it?
Yeah, I definitely agree with that statement. I think another example of this is if you look at fossil fuels. If you think within New Zealand, we've got Genesis Energy who emits a lot of emissions into the environment, but you can't just not invest in them because they've got proper plans and things in place to reduce these emissions, and for the security of supply of electricity, you need this company. So it also raises an interesting debate around whether you should be engaging with this company to find out more about them rather than just completely excluding them from your portfolio, just because on the face of it, they look like a high emitter. But in reality, they're actually doing a lot to try and reduce these and, have proper plans and things in place.
Yeah, absolutely. So I imagine there's a lot of people listening that think they might know a lot about sustainability, and they might know which companies are the good ones, the not so good ones. But trust us, once you actually get in there and look at some of these companies and go through them with a fine-tooth comb and interview management, interview sort of people involved in the business, it's not always as you might first seem. Might just finish up with you, Ruth, and it sort of ties back to what you said at the very beginning. So I suspect I know the answer, but when you're meeting with new clients these days, and now that you've got all these great resources on the individual companies and different ETFs and all the work that Vanessa and others in our team have produced, is it a topic you raise proactively, sustainability, or is it sort of something that you just sort of leave for people that have a strong interest in that area to bring up? How do you approach it?
No, it's definitely part of every new client conversation, or every client conversation anyway. So for new clients, we go through a discovery process, and as part of that, we ask the questions, not only your investment needs, objectives, etc., but do you have preferences? Do you have restrictions? So that then opens up whether it leads to other discussions or where they sit on that from that point. So definitely that forms part of that. And for existing clients too, when we review their risk profiles and again their objectives, it forms part of that conversation as well. So no, I think it's become part of pretty much every client conversation, whether it be a review or whether it be a new client. Definitely, it sets us apart. It's wonderful. Yeah, really good.
It's fantastic, and it is like everything that we do. It's all tailored to the individual client, isn't it? Because everybody's different, so their needs and objectives, and we've all got different things that are important to us. Right, that's wonderful, great stuff from both of you. Thanks very much for joining me, Ruth and Vanessa. We'll wrap it up shortly. And for people listening, whether you're one of our existing clients and you want to know more, whether you're a new client or a potential client, we always like talking to potential new clients. There is loads of stuff that we've done that talks about all of this, our framework, how we judge companies, why we've chosen to judge them that way and rank them that way, how they stack up. It's ever evolving, it's ever changing. And we love sharing that information and material with our customers. So get in touch, talk to your advisor, or just go to our website, which is www.craigsip.com, and you'll find ways to get in touch with us. Hope you enjoyed that. We'll talk again soon. Thank you.